The European currency posted some gains yesterday as a part of bullish correction. The British pound followed suit despite weak manufacturing and services activity data from the UK. The euro was supported by relatively upbeat manufacturing PMI reports from the euro area. Data showed that factory activity across the bloc continued to contract, albeit at a slower pace than before. Germany's manufacturing PMI climbed to 42.6 in October from 40.6 in September, beating estimates of 40.5. This in turn contributed to a rise in the Eurozone Composite Index. Against this background, the euro entered a bullish correction that is likely to continue today, but much will depend on the incoming statistics. Today's macroeconomic calendar includes a batch of reports from Germany. In particular, it's worth paying attention to the IFO Institute's readings on business climate, current condition, and expectations for October. These reports are unlikely to determine the future direction of the euro. If the indices come in above consensus estimates, the euro will have every chance to extend gains. In addition, the euro area is scheduled to release data on M3 money supply and loans to households. But these reports are unlikely to have a major impact on market sentiment. As for US statistics, traders should take notice of data on durable goods orders as well as the University of Michigan's readings on consumer sentiment and inflation expectations. If inflation expectations ease and consumer sentiment improves, demand for the dollar will increase. Therefore, muted buying activity, especially around daily highs, combined with upbeat US data, could drag the European currency lower. Now let's take a look at the euro-dollar pair from a technical perspective. According to the 1-hour chart, a rise to 1.0838 on the back of positive data from Germany following by a false breakout at this level will generate a sell signal, bringing the euro down to 1.0811. If the price breaks through and tests this mark from the below, the euro could dive to 1.0788 and the 1-month low of 0.764. However, such a deep decline is only possible amid strong US data. At the level of 0.764, I recommend going long on a rebound to catch an intraday correction of 25-30 pips. Long positions at 1.0811 and 0.788 can only be considered after a false breakout. If the price breaks through and consolidates above 0.838, driven by weak US statistics, the euro is likely to rally to 1.0868. At this mark, it would be wise to go short on a rebound in anticipation of 25-30 pip move. Speaking of the British currency, a rise above the levels of 29.74 and 29.91 is likely to be challenging. False breakouts at these marks will generate strong sell signals. At today's macroeconomic calendar is bereft of any important news releases from the UK. Bears have every chance to take control of the market, especially after this week's sell-off. Bulls are expected to take over at 1.2949 or 29.27. False breakouts at these levels will generate buy signals and help buyers build a new bullish trend. Therefore, the lower the pound dips, the higher the volume of long positions will be. At the same time, please bear in mind that the downtrend remains intact, so going long is quite risky. In case of subdued selling activity and gloomy US data, sterling could rise to 1.3011, where I recommend going short on the rebound, expecting a 20-25 pip move. Going long on the rebound will be relevant if the British falls pound to the 1-month low of 1.2907. In this case, one can count on an intraday correction of 20-25 pips. Good luck to all and have a nice weekend.